What a backdrop to have for a video, huh? Gotta love it. You know, literally every single day since I've been here in California looks like this. It's funny because Florida is supposed to be the sunshine state, but I feel like they get way more sun here than we get in Florida. We get lots of clouds, lots of rainy days, and haven't had either one of those so far since I've been here. But anyways, you guys are gonna need all the sunshine you can get to handle the sobering reality of today's real estate market. You guys know me? Oh yeah, last year I was here. Yeah. Last year I was here.
And with your wife.
Yeah, with my wife here, yeah. You guys watch the channel?
Yeah.
Awesome.
I did.
What's your names?
You came to T-Brown last time.
Yeah. What's your names?
Michelle.
Hey, what's up, guys?
Hi.
Michelle and
Hound.
Hound. Nice to meet you guys.
See you here again, huh?
Yeah.
Second time you're here.
Yeah, it's a beautiful day, huh?
I know.
I was just saying that. I was starting off the video talking about how beautiful it is here.
Enjoying your time.
Yeah.
Thanks, guys. Thanks. Thanks for watching the channel. I appreciate it.
Thank you.
All right, take care. Bye. How awesome is that? Starting off the video, meeting some friends. So here's the deal, guys. The home prices have been rising faster than people's incomes, which isn't going to come to a big surprise to people who have been trying to buy a house and are kind of getting priced out of the market. But the reason why that's a problem is not just because people can't afford to buy the houses anymore, but people also can't afford to keep them anymore either. Okay, because even if you got the house at a more affordable price, all the other costs have gone up so much that sometimes people just can't afford it anymore. So what happens is this: a lot of people go into buying a home and they don't understand that their monthly payment can change, because they always get told that, hey, you know, you get the 30-year fixed mortgage and your payment's going to remain the same forever, which is actually a huge lie. But there's two problematic expenses right now that have been skyrocketing for people that are causing it to be unaffordable for most, and those are property taxes and insurance. And I know you guys have heard me talk about this before. It's not the first time. However, the problem is even those expenses are also rising at a faster rate than people's incomes, not just the price of the home. So when you're looking at just those two things, if you already own a house, then you can easily be priced out of your own house just because of rising property taxes and insurance. And you know, it's funny because I'm reading this story that's talking about this, which is, you know, way behind the curve, because I've been talking about this stuff for the past 2 years, and now that it's happening to more and more people, finally mainstream media is starting to pick up on this and realizing that this is going to be a big problem for a lot of people moving forward. They say that the average person earns about $225,000 in wealth over a 10-year ownership period, according to a 2022 report from the National Association of Realtors, which could be kind of skewed, especially since it's including the pandemic years there. But anyways, let's say that that's true, guys. That wealth is only on paper. You don't get to extract that $225,000 in wealth or equity until you sell the property. In the meantime, you're responsible for all the expenses that a lot of people can no longer afford. According to some CoreLogic data, homeowners whose properties were reassessed between 2019 and 2023 saw a median tax increase of 25%. So a lot of people haven't seen their wages go up 25% between 2019 and 2023, guys. And those are people that bought pre-pandemic, right? If you bought a house in 2018 or 2019, even really most of 2020 is before we really saw prices go insane. They say that the average median taxes for properties in the US that were reassessed increased more than $600 per year over that period, which might not sound like a lot, and to me, honestly, it doesn't. It sounds like that's on the low end, especially with a lot of the examples I've shown you guys here in the videos. It can go up far more than that. We're talking by thousands, tens of thousands of dollars more than that. Homeowners Insurance has also seen a 20% increase between 2021 and 2023, and according to Insurify, they estimate that insurance rates will rise another 6% by the end of 2024. Now, I recently reported to you guys that Citizens Insurance, the biggest insurance company in Florida, the insurer of last resort, is already looking for another 13% rate increase for next year. So, you know, that's far beyond the 6% that they're anticipating here. And obviously Florida is an outlier case because we have basically the worst problems with homeowners insurance in the whole country now. But still, even if you live in a regular area and you're seeing a 6% increase basically for nothing, that starts to hurt your wallet year after year. Right now, the average annual premium for Floridians is $11,000 a year, and that's as of 2023. So you can guarantee that the 2024 numbers are even worse than that. But even if you're able to keep your property taxes and insurance relatively stable, one thing that no homeowner can escape right now is the cost to repair your home. That cost has also skyrocketed in the recent years. When you look at how much building costs and labor costs and material costs have gone up over the past several years, that's something that's up over 30%. So how many people are making the wages to keep up with those repair bills? Now, sure, if you can do it all yourself, if you have the means to make all the repairs necessary to your house on your own, then that's great. But most people don't have that know-how and skill set and need to hire somebody, and that's where you can really get hit. And there's some things that are just better left to the professionals. Like if you need to install a new HVAC system in your house, you probably don't want to try to DIY that unless you have extensive experience doing that sort of thing. But this is what you guys can do. If you are going to be buying a house, you need to see if you can get a history of records on that property of what the costs were over the years. If they have a pool, find out how much the owner is currently paying for pool maintenance. Find out what the current electric bill is. Find out what the current homeowners insurance bill is. Find out what the water bill is, the gas bill, trash removal, all of that stuff. And to be honest with you, if once you ask the real estate agent for that stuff, they're gonna kind of look at you like, huh? Because no one ever asked for it, guys. They show people the houses, they try to get them to fall in love with features of the house, and that's it. They try to get you to buy the house based on that alone. And then in the meantime, you're not asking all the important questions about what really needs to be discussed. And then therefore, you're completely in the dark about what the true cost of ownership is for any given property. Just like the other day, we were talking about how a lot of the problems with condos and building maintenance and building financials are not disclosed up front. Well, this is another thing that should be disclosed up front when you're buying a regular house. You should get a disclosure form from the homeowner showing you all the current expenses and what they are right now, so you can get a realistic picture of what you're going to be paying and understand that some of those expenses are going to increase once the ownership of that home is transferred to you. Because this is something that hits people time and time again that they just have no idea about until it's too late. You know, people get qualified for a $3,000 a month mortgage, and then they want to stretch it to buying a house that costs $3,300 a month, rather than looking at houses that maybe you could buy for $2,500 a month and give you some of that extra wiggle room with your monthly budget, which you're probably going to need. But if you're somebody who already owns a house, you're kind of screwed, guys, because you really don't have a lot of options besides to pay these bills. And if you don't, you're probably going to end up being forced to sell your house at some point down the line, or maybe even end up losing it in foreclosure if you can't pay things like the property taxes. You know, a lot of people say to reach out to your mortgage servicer when you're having problems, you know, affording the house and this and that. That way you can get some reprieve from the mortgage. But all that's going to do, guys, in the end, is it's going to delay the inevitable. That's going to put you in a situation where they're going to pause your payments. Meanwhile, you're still collecting more debt, and you're just going to owe more than you did to begin with. And if they lower your payment somehow through a loan modification, that's also going to be tacking on the amount of debt that you owe. So that's not really a good plan for you either. And I saw another interesting story today about how the high mortgage rates have cost the U.S. economy billions of dollars just over the past year, because the high rates have, number one, discouraged homeowners from moving over the past few years, and at the same time, the high rates discourage new people from buying because the cost to buy is just exorbitant and people can't afford it. So it's estimated that the higher mortgage rates have led to a 1.2% point increase in Americans who didn't move between 2022 and 2023 because of the high rates basically held them back from moving. This equates to about a $296 per household loss over this time frame, and these losses amount to about $20 billion a year. And you got to think that even the people who did move and people who did buy a house, they were also weighed down by higher mortgage rates, meaning that they had to buy a cheaper house. They had to prioritize spending more money on the mortgage and less money on other things that they might normally buy for the house or spend money on. To top it all off, people who moved in 2022 and 2023 paid an extra $21 billion a month in mortgage payments, which adds up to $215 billion extra per year just because of the higher rates, guys. So these high rates are having an effect on the economy in the sense that people have to pay these high interest rates, therefore they're not able to pay for other things. That's pretty much what you're seeing happening with this. Even with the mortgage rates dropping recently down to less than 6.5%, it's at like 6.47% right now, that's not even enough to get people back in, which isn't a surprise, it's just a statement of truth. As of the latest reading from the National Association of Realtors for the June figures, existing home sales dropped by an additional 5.4% year over year. And in 2023, it was actually much worse. It went down by 19.3% year over year. So the home sales have been continuing to drop year over year ever since 2022. Now, the party's been over for a long time. But one problem I see is that you always have people who are desperate and will do anything to buy a house. Those are the people that FOMO'd into the market and who bought. And the people who haven't done that yet are now looking at taking even bigger risks to potentially get into a home, guys, which I don't recommend, but this is these are some things that people are looking at doing. About 17.3% of house hunters who were recently surveyed said they're willing to sacrifice their physical safety to find a home they can afford within the next year. Okay, this is a report according to Redfin. You know, people are taking this way too far, guys. Moving into a bad ghetto neighborhood in order to afford a home is bad news. You never want to do this. This is one of the #1 reasons that people regret buying homes, besides they can't afford it and the cost is more than they anticipated. It's moving into an area that they don't like. You don't ever want to do this, ever, ever, ever. And the worst part is, it's mostly young people who are looking at doing this. You know, it's 23.7% of Gen Z, 18.1% of millennials, even 17.5% of Gen Xers are looking at, making this desperate move right now. Now, I know what you're thinking, especially if you're younger, like, oh, I'm never really home. I don't really have to worry, like I'm always at work. I'm not going to be taking late night walks through the neighborhood or whatever. But it's not just about that. You have to worry about people breaking into your house. You have to worry about squatters. You have to worry about people stealing your car. You have to worry about even more violent crimes happening to you, getting mugged on the street or raped or who knows. Not to mention that the resale value of that house isn't going to be very good, because chances are, if you're buying this house out of desperation because it's all you can afford, you're not going to be able to turn around and sell this house for a hefty profit in the future, because no one else is going to want it. People are going to realize this isn't a good neighborhood. Why on earth would I buy this? Now, I'm all for making sacrifices, guys, when it comes to the number of bedrooms, or maybe the school district, or maybe the amount of amenities in the house or nearby, things like that. Those might be necessary things to sacrifice, especially if you're a first-time home buyer, and then you can trade up to something better later on. But please don't sacrifice your safety over buying a house. It was not going to be worth it. You're much better off being a renter in a nice area that you feel safe in, versus being an owner in a place you feel like you have to be on lockdown all the time. And if you have a real estate agent that's trying to convince you that this is the right move and that's what you should be doing moving forward, fire them and hire somebody else, because they're just trying to get paid. They don't care about you or your safety. And this probably has a lot of people thinking, like, are homes ever going to get more affordable? Well, I think so. But it also depends on how you look at it, right? There's two different ways to look at it. Like, are homes going to get cheaper in nominal terms, meaning like, is the actual price going to go down? Or is it going to get cheaper in terms of prices adjusted for inflation, which I think is a guarantee. Nominal values going down is more of a guess. But we have seen many markets already where prices are coming down in nominal terms, which means that adjusted for inflation, the prices are coming down tremendously in those areas where the prices are going negative year over year. So one thing you have to look at, guys, is like, okay, The value of a purchasing power of our dollar has gone down so much over the past 4 or 5 years. I think it's gone down by like 25% in the past 4 years, which is a lot. So the one way to look at this is you can take any house on the market today and subtract 25% of the current asking price, and that's what the price should have been 4 years ago, just accounting for how much purchasing power the value of the dollar has lost, okay? And then if you're in a market where, say, prices have already come down by 5 or 10%, you can tack that on in addition to that. And then you might even find out that prices are actually cheaper today when adjusted for inflation than they were 4 years ago where you live. It's just that nominally the prices are still higher. That doesn't mean we're not going to see a huge nominal price crash in real estate. It just means that in some areas you're already seeing prices that have come down to lower than where they were pre-pandemic when you adjust for inflation, and that is saying something. The problem is that not everybody has been able to benefit from inflation, right? That only works in your favor if you've been able to take advantage of high inflation in terms of seeing other assets appreciate, seeing your portfolio in the stock market appreciate. You know, if you've been holding on to gold and silver, you've definitely seen that appreciate during this time frame. But if you had nothing, then that's why people still look at the housing market as still being a bad deal. But I think if you run the numbers on a lot of properties, you might be interested to find out that they really haven't seen all that much appreciation when adjusted for inflation. But I think another thing that could actually push prices in nominal terms to come down sooner than later is actually the interest rates coming down, guys, because one thing that you might see happen is as the interest rates finally start to come down for mortgages, you're probably going to see a lot more sellers list their homes for sale on the market because they have been literally locked in these homes with low rates, right? They were not able to move, and they're waiting for rates to come down to a specific point where they feel like it's worth it now to move. But you're going to have a lot of people, a lot of pent-up people, a lot of pent-up demand on the selling side who wanted to move over the past few years but couldn't, put their homes for sale on the market, but yet there probably isn't going to be a whole lot of buyers there. And that's because even when rates come down, say they come down to 5%, a lot of people are still not going to be able to afford houses at those prices. And when you combine this new way of real estate agents earning commission into the mix as well, if a lot of buyers start having to foot the bill for their own real estate agent's commission, that is yet another ding on the price for houses. If inventory continues to rise like it has been and you don't see the buyer demand there, plus buyers are now on the hook for their own commissions, that's basically a guarantee that prices in nominal terms are going to have to come down because it's going to be the only way that buyers will be able to buy those homes. Even Lawrence Yun over at the National Association of Realtors is finally admitting this, that inventory is going up faster than buyers are pulling these homes off the market, and eventually that's going to give buyers more leverage in a lot of markets that already has, guys. Like, just look at what's happening in Florida right now, in Texas. There's a huge surge in inventory in a lot of these areas there. And inventory is so high, in some cases even above pre-pandemic levels, that gives you tremendous leverage as a buyer. The problem is a lot of sellers still haven't caught up mentally with the fact that, you know, their home is now a dime a dozen, and there's so many other homes for sale, and they're going to have to start getting used to receiving low ball offers. Because when I can buy 20 other houses that look just like yours for the same or less price, you know, you're going to offer a lower price as the buyer and try to land the one that you can get the best deal on. Even Lawrence Yun admitted that, hey, we're seeing a slow shift from a seller's market to a buyer's market. Homes are sitting on the market longer and sellers are receiving fewer offers. More buyers are insisting on home inspections and appraisals. Well, should have been doing that all along. And inventory is definitely rising on a national basis. Once again, this is going to be different for everybody depending on where you live. Not saying everybody has a surge in inventory right now across the United States, but on a national level, that is what we're seeing. I really think the interest rates coming down is going to be the catalyst for prices coming down. And typically it's the opposite, guys, but everything has been the opposite. You know, the rates going up was supposed to be the catalyst to bring prices down, but all it did was restrict inventory even further. So since we know that that's something that happened recently, once the rates start coming down, it's reasonable to think that that will start unlocking a lot of the inventory. But the question is, will the buyers be there to absorb it? I don't think they will be in droves. like so many people are expecting. You know, all the experts think that as soon as they lower mortgage rates, then all the buyers are going to come rushing back into the market. But the reality is, even once rates come down, there's going to be a high percentage of buyers that still won't be able to afford homes. But that doesn't stop governments from giving out as much free money and as many advantages to people as possible to get into home ownership, you know, like all the subsidies that are out there. In fact, something I've talked about here before on the channel is the Florida Hometown Heroes program, which basically was started off as an idea to just give hometown heroes extra free money to buy homes. Those are people like nurses, first responders, and police and firemen. It's supposed to be just them. But literally right after this program became live, they opened up this program to everybody. You just had to be a Florida resident. So it went from just giving first responders, hometown heroes, free money to everyone free money. And they have given away a ton of free money, guys. In fact, just in its most recent funding cycle, the Hometown Heroes program shelled out $61.3 million in free money, and that equated to 3,745 families taking advantage of this and buying homes just in the latest lending cycle. Okay, this is not the total amount of money they've given away or the total amount of people they've helped. This is just a fraction of it. And basically what they do is they give you up to 5% of your first mortgage amount, maximum of $35,000. But still, guys, that is huge. To get a free $35,000 just to be able to buy a house, you know, that is insane. They give it to you in the form of a 0% non-amortizing 30-year second mortgage. So it is something that needs to be paid back. It's not like you get to keep that. But the fact of the matter is, it helps people get into homes that otherwise wouldn't be able to afford to get into one. And even with all of that free help, it still hasn't been enough to slow down the amount of inventory piling on the market in Florida because of all the reasons we talked about earlier in this video. You know, the simple fact is, many people who bought over the past 5 years cannot afford the property taxes anymore. They definitely can't afford the insurance, and they also can't afford the maintenance. But somehow the state thinks it's a good idea to help people buy homes that literally don't even have all the money to get into it. You know, that's the same mistakes that the federal government makes. That's why you see the delinquency rates on FHA borrowers skyrocket right now to almost the highest level we've ever seen, short of the 2008 great financial crisis. And everybody wonders why that's happening. It's happening because when you give people money that don't have money to buy a house, they're not going to be able to afford to keep the house. Maybe they could have 20 years ago when prices were more stable on things and we didn't see this crazy amount of inflation, but we all know that those days are over. It's not equivalent today to give somebody money to get into a house that can't afford it as it was 20 years ago. Those people very well may have been able to get into those houses and afford to keep those houses all those years because the cost of ownership didn't increase all that much up until recently. So the landscape has changed. In 2024, you can't expect people who get free help to buy houses with 0% down or 1% down or even 3% down like FHA. You can't expect people like that to be able to afford the house long term because literally all these expenses are rising faster than their incomes, and there's going to come to a point where those expenses are going to get so large that they're just going to have to let go and they're going to have to sell. And Florida is already the preview and the poster child of this. You know, you're seeing it happen now first in Florida, but you're going to see it happen in a lot of other states around the country as the cost of maintaining those homes goes beyond people's budgets as well. So if you enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I will see you in the next one.